Let's have a look at how MIM behaved. Okay, good. So that's actually finished. Okay, so it's generated. Some gifts for us. So here are the hundreds of PNGs. What I usually like to do is just arrange this by type, so I get the gifts all the way at the top. So the first thing we'll look at is Uniswap v2. Let's zoom up. And so you can see this is doing exactly what you would expect a constant product liquidity pool to do, right? MIM is a stablecoin, and so the price doesn't really move anywhere. And it's from looking at this type of visualization that you come to understand precisely why protocols like Curve exist, right? And what the motivation for creating their augmented, extremely concentrated bonding curve was. And it's because look at all of this liquidity that's never used, right, on either side. It's very, very, very inefficient. This is kind of the poster child for capital inefficiency when it comes to AMMs. But having said that, it's still doing stuff, right? You can see that as the price oscillates around a little bit, even though it's not very far. You can see in the bottom right the earnings that you're getting as a liquidity provider. It's pretty hard on V2 to actually see this, but if you pay attention to the way that the numbers on the y-axis move, you get a fairly good idea of what that fiat accrual rate is actually like. Okay, so that's really boring. Let's have a look at Uniswap v3. Okay, so here you can see Uniswap v3 doing what Uniswap v3 does quite well, right? We've got a range here, which is the one that we chose, and as it oscillates back and forth, this spread, which again was the fee that we chose for this protocol, is essentially being earned by the liquidity provider every time the price crosses it. And so you can see when the price is completely outside of this range, we've only got MIM in this case. And when the price is starting to move into the red range, we're getting a little bit more USDC liquidity and so on. And you can see in this chart, in the top right, just how profitable this is, right? And I would say that this is pretty good, right? This is one of the pairs that makes a lot of sense on Uniswap. And so you can see versus HODL, right? It gets over a 1% return fairly quickly, whereas in Uniswap v2 that would have taken like geological time periods to get that level of returns. So yeah, that's Uniswap v3, acting symmetrically, doing what Uniswap v3 does. Let's have a look at Carbon. Okay, so Carbon, we've got, you'll notice that there are some very distinct differences here. One is that we can keep the liquidity out of range for a very long period of time. And so as the market price is kind of dancing around in this region before reaching our targets, nothing's actually happening. Which is distinct from how traditional concentrated liquidity protocols would operate. And so what you're really doing with Carbon is you're waiting to catch those very volatile moves, right? When you've got the opportunity to buy MIM at its DPEG, and then sell it at some higher rate when it spikes higher. So you get a lot less volume through Carbon. But you can see here that it got to about a 1% return, fairly quickly. But yeah, again, it's these types of stablecoin pairs. You're probably better adjusting these ranges so that you can get something that's much more sort of Carbon specific. Whereas what we've done here is really sort of try to create something that I'd say is reasonable or Uniswap v3 leaning or something like that. But yeah, so we can do things here to compare these. It's also worth pointing out that in this particular demonstration, Uniswap v3 is actually coming out ahead of all three protocols. I think we saw
Mark,
there.
Quick question.
Yeah.
It looks like the spread, now that you've got Uni v3 back up, or the concentrated liquidity, it looks like the spread is a lot less. Is that just the way that it's shown in the animation, or is it larger? Did we choose a larger spread on Carbon?
Well, on carbon, the spread is almost always larger because in Uniswap v3, the spread is always equal to the fee. And I think in this case, we set the fee, somewhere around 30 basis points. So that spread is always 30 basis points on Uniswap v3. Whereas on
Okay,
carbon, the spread is actually determined by where you set your range and how far away your range is from from being full again, right? So if we come back to some of these ones that I prepared earlier,
maybe that's
right?
what yeah.
You can see here, yeah. So you can see here that the spread on carbon is not constant, right? It really depends on how performant your position has been, and that's why I created this like oscillator, so that we can see exactly what that sort of behavior looks like. But that spread, right? It's always changing. Whereas on Uniswap v3 and Uniswap v2, by the way, that spread is always the same. Because we've got quite a large price range here, you can barely see it, but there is a gap between the red and the green zones here, and it's always equal to 30 basis points. And you can see it maybe a little bit easier in the bottom left chart. If I can make that menu go away, it's really annoying. But you can see that there is this tiny little black region, which is equal to the Uniswap spread. So that's the MIM chart. Would you guys like to do another one? Something a little bit more volatile, maybe?
Yeah. This is something. Yeah, Mark, this is something that we had spoken about, making the spread when we were talking about ST ETH and ETH.
Yeah.
So he's shared this in our live stage calls. And let me see. Has a Google Drive here shared as well. Is that something that we can work with on the call?
Yeah. Where is this being shared?
Scroll down again to below. You'll see carbon. You'll see V2.1
Live stage
V3.
calls. Got you. Okay. Made some spreads. Yeah, cool. Okay. STETTC, CVX, curve. All right, cool. Let's have a look. Nice. All right, so this is perfect, right? This is already in a CSV format. So what I'm going to do is I'm just going to download this. Put that here. I'm just going to take the. You don't have to do this. This is just my own PTSD from Unix. But I'm taking out the white space and the dashes. Okay, so let's go ahead and do that. So we're going to go back to the GUI, and I'm going to replace that file name, which was the MIM CSV, with this one that we just received from 0xBet. And I'm going to restart and run all of this. Okay, so this is ST ETH versus ETH. Unfortunately, my simulator at the moment still assumes that the numeraire is USD, but not a big issue. So let's think, how we want to do this. So first of all, it's only got 800 data points, so I don't mind taking all of that. Then let's see. So it looks like it basically has an automated range management built with the protocol, like Arrakis. Carbon looks more stable in Unity 3. I'm just going to see. Okay, so I'm trying to read these. Charts that 0x has provided us, but I can't quite see where he wants the ranges set up. 0x, if you're there, and you've got a specific range in mind for both protocols, please feel free to let me know. I can even zoom up a little bit here. But basically, remember that these are in terms of ETH. So we can say that this is like when it's spiking high, this is ST ETH as like 1.009 ETH. And when it's going low, we've got 0.9839 ETH. But if you don't have any suggestions, and am I mistaken, by the way? Like, can you actually see a particular price range, Joe?
Let me see. For where
Okay.
you want?
Yeah. Okay. Well, whatever. I can still do this. So let's say
Yeah, I think you can hear me now. Yeah, I
Yeah.
didn't have
yes.
anything too specific in mind. It's like, I don't know, it's like two tokens that on their own are volatile. So then I think it's interesting if you like divide them against
Yeah, of
each other.
course.
So you're playing like the spread trade.
Well,
But then they should just basically hover around one if you believe that
right.
Lido ETH should track ETH. So what you have on there looks like pretty reasonable.
Okay, cool. So we'll use that for Uniswap, and then to do something a bit different this time. And this is how I plan to use Carbon, by the way. I'm going to set the buying range to be like somewhere down here, right? So that we can take advantage of these, these profound drops. And one of the other things that I like about Carbon is that we can set the sell price to be exactly unity, right? So if we want to, we can create an infinitely concentrated curve at exactly one. And this means that you're always buying, the wrapper at a discount, and then you're always selling it at exactly at unity, which is helpful. We're going to miss a little bit of that top action. So let's just go ahead and do something like that. I feel like, right? If I was someone that was, creating a strategy for STE, this is probably what I would do, right? Somewhere between, a 5% drop and a 10% drop is where I'd be happy to buy it. And then I'd be happy to sell it anywhere around one, really. So let's use, are you comfortable with that, ZeroX?
Yeah, I think some of this is like taking advantage of the benefit of hindsight because like nobody was expecting that like
Yeah, sure.
descent depeg to happen ahead of time. But both are interesting, like doing it that way
Well,
or
I mean, if you object, I'm happy to set these levels wherever you want. You're right; it is taking advantage of hindsight. But where would you like me to set them?
so I think if before that depeg happened, people would have probably been playing the range more like 98 cents and higher, like I don't know, 98 to 99. And I think
Sure,
that depeg like surprised a lot of people.
got you.
And I think that's one
So
question I have is I think you mentioned Carbon should be able to handle wild swings better than UniP3. So I think this is
right,
maybe an example of that.
yeah, absolutely. Okay, so what about like this range, right? And maybe I'm still giving myself a little bit too much advantage here. But what about like that, right? Because compared to Uniswap, right, we started at 1.0086 and down to like 97, 93. And so this one, we've got pretty much that same range. We're just giving ourselves a little bit of a gap in the middle. But even so, right, if you want me to close that gap, I can. What would you prefer?
Yeah, no, I think that looks fine. Yeah, as long as like the bottom end isn't too low and it's like at around 98 now.
Cool. All right, let's do that. So this is, we're selling between about one. Actually, we should probably move that up a little bit. We're selling down close to one up to about 1.01, so about a 1% increase. And we are buying down to like 98. So these are fairly similar situations. Let's go ahead and do that. And because of where the market price currently is, we're forced to, we can't do much about our TKN component, which in this case is going to be the STE. And, I'm going to say that we start our position because it's saying that we did it all the way back here. We're going to start it sort of like halfway through, I think, just so we can sort of show off that this is able to do this. Now here, it's actually not going to matter what I do because we're out of the money on the TKN side. It's going to force it to be 100% USDC for the simulation's sake anyway. So I'm just going to go ahead and set that up here. Let's do the 10,000. And the protocol fee, again, somewhere around 30 basis points I think is good. Let's do all three. We will animate it. And again, you'll see that we've created this pickle file, which is the carbon time series STE pickle. So let's take that and run that through the simulator. So again, we just replace this file name and hit go.
Now, Mark, we're talking about a very, very tight range here. Is this something that would be practical with Carbon being on chain, or not so much?
It's actually, in a way, I mean, it depends on what you mean by practical. Can you elaborate for me?
Well, naturally, I always go back to gas costs and things like that. And when you're trading such a small amount in a percentage basis, it just seems like that. I'm not sure it'd be productive, but maybe that's where I have bias against Ethereum's gas fees in a traditional trading environment.
Right. No, it's actually, in a way, it's even more practical. Because, as you pointed out, because the gas fees on Ethereum can be relatively high. It means that these tiny differences in the buying and selling price of your asset can basically be almost nothing compared to the gas cost of operating on the chain overall. And so you can actually set your buy and sell ranges to be relatively gratuitous, and traders will still take it because compared to the price of the gas, the spread that you've set is almost nothing. And this is where being able to set your spread dynamically is actually an interesting, has interesting opportunities. Because if you take into account the gas adjusted price of things, you've actually you don't have to have a razor thin margin, and expect that people are going to off by a much wider margin than that. It's just not true. Obviously, for things like stablecoins and things like that, you're going to have a huge amount of competition, and so you probably won't get routed through very frequently. But you also don't need to get routed through very frequently. One of the things that I think I've said in previous DAO discussions is that to be profitable on Carbon, you only need to someone to trade with you once or twice, right? You need to get hit. You basically are waiting to get your limit order hit on the downside and then hit on the upside, and that's it. So you don't necessarily need to have this oscillating pattern in order to be successful. But obviously, it's better that way because you get to compound over time. But the short answer is it's fine, right? If you want to set a very, very narrow range, go ahead and set a very narrow range. It's not affected by the gas costs of the chain. In a way, you can, because you can basically set up your sell range, and then as I've done here, you can choose your position inside of it, and then that will adjust as the thing as your strategy progresses over time. But with respect to having discrete bands, the answer is no. Except that there's nothing stopping you from just creating multiple different strategies, right? It's fairly it's a fairly inexpensive protocol to run, because we're only it's only 3 slots in memory sort of thing. So compared to interacting with other concentrated liquidity protocols, I actually expect this to be priced in terms of gas very competitively. And so setting up 2 positions or 3 positions or something like that is absolutely reasonable, and certainly it's something that I will be doing. Yeah, exactly. And the way that we've set up the formulas means that it's not bounded by tick numbers or anything else, which is means that you have a lot more resolution than you would typically. Yeah, exactly. So yeah, and yeah, it's not like a big problem. Like I don't want anyone to think that I'd be like super critical of the way they set up that protocol, right? They've done it in a very specific way for a very specific reason, and it's aggregation, right? The whole point of Uniswap v3 and the way that it's organized is that you basically pool your money with everyone else, but into specific buckets, and each bucket serves like its own little liquidity pool. And then as a trader trades, if they trade through that tick range, they have to instantiate or initialize the next tick range, and then if they trade through that, they have to initialize the next one, and so on. And in Carbon, we kind of just take that concept and we kind of break it down even farther by saying that each liquidity provider can just be their own liquidity pool, and they don't need to pool it with anyone else. And the routing, even though our front end is actually very, very good at matching things and performing we have invented an algorithm that's able to route through any number of these different liquidity positions with perfect precision. We don't necessarily need to rely on front end because we have trade aggregators like 1inch and Matcher and so on that we'll be integrating with that will know how to do that anyway. And so when they find a trade route that involves Carbon, they will just take it. It doesn't matter that these positions are aggregated together or not, so long as you're providing sufficient liquidity to attract those kinds of trades for the gas cost. So there is this small caveat that I think Carbon does, it does lean on the side of people that take trading seriously and are putting down, something like, 4 or 5 figures when they're creating a position. So these small sort of $100 limit orders and things are probably unlikely to be fulfilled with good regularity. Right, I would say this is a small concession to make for targeting the demographics that we're actually hoping to service here. Okay, so right now it looks like we've completed the simulation, and I'm going to show you a little bit more data as well. Here we are. So we've completed all of the PNGs, and now we've got our GIFs. And this should be right underneath. Yeah, here it is. Okay, so let's have a look at V2 first, because it's generally a good one to choose. So you can see here, right, this is that same price chart that we were looking at, evolving over time. Performance versus HODL, constant product AMM is actually not too bad. And yeah, I guess this is kind of a good a good base value from which we can compare the other results. So let's have a look at Uniswap v3. Okay. Honestly, this is exactly what Uniswap v3 lives for, right? Constantly crossing these ranges and generating this, basically chasing this spread around all the time. And so you can see here the LP, or this particular position on ETH versus staked ETH, would have attained something like, okay, that seems to be approaching sort of 14%, I think. So this would have been like super profitable on Uniswap v3. Might even be like, yeah, okay, so it's actually like it's flirting with a 15% return based on the strategy that we provided it with. I'm just going to let this play out so that we can see exactly how good it gets. You can see, yeah, okay, here as it's like winding down, we're kind of, okay, so as it dropped out there, we ended up taking a bit of a hit, but not too bad. And came back up. Yeah, okay. So yeah, okay, it touched on 15% return, I think, and this should end pretty soon, I think. Yeah, okay, so it got to about 15%, which is pretty good. Let's try the carbon strategy that we set up and see how it does. Okay, so over that initial period, carbon's actually, it got up to 14% very quickly. So these, these oscillations here, this is exact, like, I said that's great for Uniswap. It's even better for carbon, right? The more crosses you get, because the spread adjusts, means that you can basically, you can wait for the market to come to you. And so on carbon, for that same period, we're already up to like 21%, I think. And yeah, so I'm not sure what's going to happen here because the market hasn't quite caught up to us yet. But yeah, I mean, you can see, it's fairly performant for these kinds of assets that are supposed to be pegged with each other. We're coming down a little bit here. As, we saw the same activity on the Uniswap V3 position. So this seemed to have peaked low at about 15%, I think. And if this starts to go up again, we should see a slightly more performant profile because now we get to sell all of these. Yeah, okay, there we are. Cool. So yeah, I'm actually happy with that result. 0x, you want me to share these gifts with you, by the way?
Mark, out of curiosity, 0x, go ahead.
I was just saying, yeah, they're super interesting. Tells an interesting story about Steve too. Could be good to tweet about.
Cool. I'm going to show you something else as well.
Mark, really fast, where did carbon end up on that? You know how you can go to the last PNG, how you showed me you can go to the last PNG to see what the final result was?
Yeah, sure, let's do that.
I mean, it was
out of curiosity, just because it happened so quickly. What was it? I know it was like 0, 15, 23, 24.
So that's Uniswap V2. Uniswap V2, Uniswap, so carbon will be...
So this brings up something I don't think that we had discussed yet. You can look at the GIFs and you can watch the animations, but you can also go through your PNGs. And the last, like the highest number is going to be the last, like the final result, right?
Yeah, so it basically, so carbon on
25.
this, on this particular strategy, flirted with 25, the same way that Uniswap was flirting with 15. But, in a way, this is, carbon got a huge head start from this volatility at the front, right? You saw that, it basically plateaus out a lot sooner. So, carbon being the buy low, sell high protocol, if you have more opportunities to buy low and sell high, then you're going to do better. Whereas with Uniswap V3, it really is a market making protocol, right? It's trying to keep the spread constant, sure, but it's also, it's trying to make a market wherever that market happens to be, and you're trying to guess, where that market's going to be. So I'd say in this particular case, because of that strong volatility that we had, not just at the beginning, but also halfway through and also towards the end here, that gave carbon, a very significant boost. And if we corrected it for volume, although STs didn't get a lot of volume, Uniswap V3 might have done a little bit better. But I think in this particular case, this is a really excellent demonstration of how these pegged assets can perform really well on carbon if they've got that volatility. Whereas with things like USDC versus USDT, actually in those cases, Uniswap V3 is probably better because it manages to keep a low spread, and that spread is expected to stay consistent over time, right? People aren't going to tolerate a huge amount of slippage on a stablecoin trade the same way they do on some of these other stake derivatives, and I expect that to remain true almost forever.